Okay, very good morning. Friday, 25th of May. So a quick overview or look at some of the news, mainly based upon Trump once again and a Brexit update. I'll have a quick look at the calendar of the events forthcoming, and then I'll hand you over to Sam. But I would say in advance, my part will probably be quite brief today because not a great deal new for me to say. And I'd rather just then look at the market from a technical setup. So I'll let Sam talk you through that side of things. But this morning, US futures pretty flat in terms of the equity market, if not minor positive, and that has translated into a slightly positive open here for European equity markets. Very minor gap up in the likes of the DAX future, and the Euro Stoxx just finding some support around pivot at the moment. One of the things that you'll notice here is, if we just look at the S&P chart briefly, was that you obviously had this breakdown, if you like, in the discussions and the summit to be held. That was confirmed then that Trump had called that off, and we saw a pretty quick fall in the US equity market yesterday afternoon. This was around the cash equity open, and that kind of soured sentiment across the board. However, we have recovered into the close on Wall Street, and even more some in Asia. We have had some conciliatory type commentary out of North Korea. So North Korea, China and Russia, the new leaders of diplomacy on the global geopolitical front. North Korea saying they're still open to a summit even after Trump scraps the talks. And so this kind of, I guess, olive branch, if you like, in being a little bit more friendly in their approach to try and bring the US back to the table, has been kind of lukewarm received by the market, I'd say. And I'd say market reaction to this type of headline now seems to be dissipating a little bit, because it almost feels like it's kind of the boy who cried wolf. They keep saying they're going to meet and talk, and it becomes friendly, then it blows up. It's kind of like me and my first ever girlfriend a little bit. But you know, such is the way this is going. It's I think people are a little bit failing to believe that this is going to happen, and so therefore the net impact and result on the market is getting less and less over time. But let's see. I think this is still something definitely to monitor on things like Twitter and so on and so forth. So just keep an eye on it. But in terms of this morning, is it going to be an overarching kind of positive sentiment because of what North Korea said? Well, I think that's already reflective in the charts this morning. It hasn't really had too much of a sustained impact. Looking at the other subject, of course, is Brexit. And again, I'll keep it short because ultimately I think this comes as absolutely no surprise at all. As you know, Europe have been meeting pretty much throughout the week, the Eurogroup and finance ministers and so on and so forth. And basically the European Union has dismissed many of the UK's plans for their post-Brexit relationship as little short of fantasy, as mood of negotiations has deteriorated and progress has basically stalled. So again, the Irish border, still the sticking point, and we've already gone through this kind of period of news flow this week about the extensions to the transitional deal. So this isn't really new. I think it just kind of summarizes, really, it bookends this week in terms of where this negotiation is at the moment, which hasn't moved on at all, really. And if anything, it's looking more and more likely that there's going to be a drawn-out process. Okay, as I said, I'm going to keep it brief, so quick look at the calendar, and I'll hand you over to Sam. And this morning, coming up at 9 AM, you've got German IFO, business climate. So just to recap for any of the newer traders, what IFO is. This is a monthly figure that comes out, IFO Institute. This is a soft piece of economic data, so it's always been quite important because obviously it's a reflection of Germany, the kind of engine room, if you like, of economic growth in the Euro area, and it's forward-looking about the 6-month outlook on the business climate. The interesting thing here is you have IFO, which is that of a whole cross-section of businesses, and they're to get an idea of how confident they are about the future and current conditions and their expectations. So is this going to be a real game changer and see quite a sharp reaction in the euro and the DAX and so on and so forth, I'd say probably not, but it does warrant monitoring, and certainly I wouldn't go in or hold a position of any size over that release from an intraday perspective. The figure itself, the headline is the business climate. It's expected to remain unchanged. Generally speaking, IFO is relatively high in its historical data set, but it has been coming off its peak in the last, I think, 2 readings. Otherwise, going further forward, just to kind of round off the UK economic data set, obviously UK retail sales surprised to the upside, but you can see absolutely really no long-lasting impact, and I think that's quite understandable, because basically that was the month following the suppressed kind of spending on the prior month, which was March, because of the extremely bad weather that we had. So a bit of a blip up, I think, is explainable in that sense, and actually comparative on a year-to-year basis over the same period, it does reflect that retail sales overall over a 2-month period has been weaker by quite a substantial margin. So it still fits this narrative of the consumer is under still some considerable pressure in this current economic climate. So looking next to the GDP release, this is obviously the second reading. So as we know, going from the kind of first reading, the advanced, to the preliminary, to the final, the impact tends to diminish over time as the revisions get tighter. So as I said, to be monitored. Is it going to be a big deal? Well, it definitely could be a big deal, and would certainly grab a lot of headline attention if it was to come in at a negative number. Don't forget, it came in last time at 0.1% on the quarter-on-quarter, so just a fraction of growth. However, you would feel a dip into a negative print. That would be below the bottom end of expectations. That would certainly be plastered all over the papers. You can imagine the kind of the connection that would be made with this kind of stagnant phase of the Brexit negotiation and its net impact it's having on the economy. Otherwise, looking further forward, you've got durable goods in the afternoon and the final Michigan sentiment. The final reading is always a bit of a non-event, so probably the durables at 1:30 would be more of a focal point. But then the speaker slate is pretty busy again, so just be aware of that. Same drill as yesterday. Looking at some of the key ones from a geopolitical front, what could be quite interesting for midday kicking off is the Russian President Putin. And you've also got Macron, Japanese PM Abe, and Christine Lagarde of the IMF. They're all meeting in Russia. Again, just given the context of Russia has been, I'd say, pushed off, bumped off the headlines, if you like, a little bit by North Korea more recently, and the renewed trade talk between either the US and Europe or US and China. But obviously when Putin speaks, it can also, and has been in recent months, very influential on the geopolitical side. So maybe keep an eye on that, kicking off at 12. Otherwise, a few of the other highlights. You've got ECB speakers and predominantly Fed speakers, with Fed Chair Powell and Bank of England Governor Mark Carney participating in a panel discussion, basically at Riksbank, it's the Swedish central bank's conference that they're hosting today, and that's going to be happening this afternoon as well, so it might be just keeping a half an ear on the squawk for that. Okay, that's it from me. So I'm going to hand you over to Sam, let him go over the charts more thoroughly. But I wish you all a good day. I'll see you in the chat room, and enjoy the long weekend.
Thank you. Let's have a quick look over at the currencies to start. Obviously, we've got the data coming out in just under 20, and then half hour after that for the UK. Wouldn't be expecting, as Anthony said, it to be the most hectic of days. Profit expectations to be a bit less than normal, I would suggest, as people over the pond will be looking for a longer weekend. In terms of where the euro could get to, I mean, look, in an ideal world, R1 would be a nice place to look to get in. I don't think we're going to get that high. I can't really see an S1 to R1 type move to the upside happening, but if it was to, that would be a decent area of resistance that would definitely interest me. Just before that, you've got previous support of the morning and the pivot which would be quite useful as another area of resistance. And we sort of broke this trend that we talked about in the briefing last morning, sorry, I should say. We broke that very early this morning in terms of looking for that continuation. And well, if we do get a push down through the S1, I think obviously the main target of the low of the week, and then maybe a push to S2 could be the option, but I wouldn't be looking to chase these markets for now. Pivot, I do like the look of if we were to get there. I think there's a decent area of resistance, stop loss the other side, and looking to target back towards the lows. Just wouldn't be expecting the biggest kind of move today. In terms of where we could finish this week, is it in terms of the importance from a technical point of view? Just have a quick look over at the daily chart here, and you can see what was a really key level of support back on the 12th of December, which is also the highs from early November as well. We're sort of just residing around that now. Can we close above? Can we close below? I think, yeah, from a technical point of view, it'll be quite interesting to see that. If we do end up pushing a bit higher above this line, you might start to see a slow grind higher, just purely technically next week. For the pound, let's just lower that down and get the pivots back on. You're seeing a similar type of reaction, the fact that the dollar side of this currency is strengthening again this morning. The dollar index just up to higher levels of the day as we speak, and with the trend line from Wednesday into yesterday similar as the euro. You get the breakdown early this morning, and we're just seeing a bit of a continuation to the downside there. Retail sales already, that move has been reversed, and obviously the data at 9:30 will be the main thing to be aware of here. In terms of levels below, obviously you've got the areas of support that we had back on Wednesday. I think to the upside, similar in the fact that the pivot doesn't look too bad. I think I like the look of that if we were to get there. Some areas of resistance a bit before that, and obviously then the previous low of the morning that we had broken through yesterday's low, offering a decent sort of chance with the previous low of today is sort of that classic trade down to the lows that we are at now. Again, not expecting too much, and in an ideal world, same as euro, you'd be looking at R1 here with yesterday's highs as a good place to get in. Just not sure we're really going to get there. Mentioned a couple of times about Aussie dollar. Perhaps this is starting to just reverse a bit, and you can see perhaps another sign of that this morning with the dollar strength. You've got euro and pound on their lows. Aussie dollar not really that interested, as it's just sort of around the pivot. Yes, it's down for the day, but only by about 13 ticks or so. So I wouldn't be chasing this market when the dollar strength comes into play. S1 to me actually looks like not a bad place to go long technically. Of course, if the dollar is strengthening and you're seeing maybe gold come down, T-notes come down, and all the other pairs under pressure, then yeah, sure, a break of this trend, and then you can start looking at yesterday's low and down to S2. But technically, I think we could start to see this market just push on a bit and reverse the overall trend of the last sort of few months, really, since the back end of Jan, early Feb. Another market before we come back onto dollar yen that will be interesting, where we finish the week, will be the FTSE, and it looks, as we're trading now, that we are going to close below the previous all-time high. For me, that's an opportunity to get short in the medium term anyway. I think you can get a bit out of this as the FTSE comes under a bit of pressure this morning, but a bit of profit taking as well going to come into the mix there. New all-time highs, why not? Is the pound going to sort of recover a bit? If we do look at that pound on that longer time frame as well, we might start to see a bit of a reversal in the dollar and the pound start to strengthen. Key level just below here in the pound, similar for euro, that 12th, 13th of December. So for me, FTSE short, I quite like it. Unless obviously the pound was to weaken considerably, I think it's a decent trade opportunity. As mentioned, we'll go through the dollar yen. Let's have a quick look now. In terms of dollar strength, last few days this market hasn't been the one to focus on, rather euro and pound has. And again, you can see this market off its highs that we had last week quite considerably. Technically, R1 not too bad. got quite a good area of support and resistance there. I do like the look of the short. If you're looking for continuation of the recent trend, I'm talking, you know, last sort of few days into last week, a break of this trend from yesterday's low, this morning's low, and the low just made now, I think will be quite interesting, targeting the previous areas of support. Looking to a similar sort of trade that euro and pound did early this morning. Oil, yesterday we saw a decent push to the downside, and to be fair, a decent recovery before coming back to what was the low of Wednesday around sort of 4 o'clock, and a couple of times that acted as a very strong resistance. Didn't quite make the S1. I know a couple of people were looking at that as well. Just as we speak, oil coming to the low of the day. So just continuing this this move that's really been happening since well, the 22nd, so 3 days. Tuesday, is that right? 20, yeah, Tuesday. Big support, literally coming up 70.25, so not far away. So I won't be jumping into any short right now. Quite a key area in terms of this market. Obviously, you know, oil can break through technical levels quite quickly, so just be aware of also a bit of a false breakout. You know, this overall trend of this market is still to the upside. But I'll be focusing on that level to see what we can get from there. With equities, which as you can see here in the S&P reversed that move pretty strongly, just sort of reiterates the points we've been making about what is the overall direction of this market. You know, it's stuck within this range for the week now. Can we get above the high of the week, or are we going to come back down and just sort of, you know, hit the pivot and go sideways? It's not my main focus, I think, but look at the range that we're in. It might well be that, you know, in the coming weeks, you know, a continuation break higher or lower is when it gets a bit more interesting and takes your focus. Technically, you know, do I see us pushing higher? I would say unlikely. Of course, with Donald Trump on his phone, anything can happen for this market, so just bear that in mind as well. Nasdaq, you can see, not too far away from that high that we made a couple of weeks ago, and in this market again, if we just get let me just remove the pivots, now suddenly not that far away from the all-time high yet again. So we've seen FTSE do it. Obviously the Russell 2000 has already done that a while back, but 3% off the all-time high for Nasdaq, so you would bet against that happening soon. We did a poll probably about 3 weeks ago, which market will make all-time highs again first, S&P or FTSE, and actually the overwhelming winner of that poll was the S&P, which is still, as you see here, about 5.5% off the all-time high, where the FTSE just went up and up and up. Admittedly, it was helped a lot by the weaker pound at that time, but quite an interesting one there. Oil, Bogdan said he's got an order at S1. Let's have a quick look at that. I think, you know, you've got those good areas of support just that we mentioned at 25. So yeah, along with S1, it's not a bad place at all, and I think you'll get a decent bounce from that. Have a look over at gold as well, just to wrap things up for the day, along with T-notes. And you can see yesterday we pushed above 1300. So, you know, now that becomes an area of support. Was obviously decent resistance on that first test, and then we broke through with the Don helping that. So keep an eye on that. I think, you know, rather than the pivot, which you've seen it work a couple of times, 1300 is the one you probably want to be focusing on. And again, where are we going to close the week, above or below? Could be quite interesting. Waiting for that. T-notes, which has recovered off those lows quite nicely, near the high of the day as we speak. Let me just make this a longer chart as well. Quite key resistance that we found yesterday. It was also the back end of, or the beginning of this month, the highs as well. So for T-notes, you know, I think this area, or yesterday's high, would have attracted quite a bit of selling, to be fair, from just purely technical. But this market, I think, has got other things on its mind for now. So again, focus, I think, for the dollar pairs, and if you're looking for dollar strength, euro and pound are the ones to go for. Obviously, in a quiet market, maybe the technical long in Aussie dollar, or a break lower in dollar yen. Obviously, keep an eye on that level in oil. FTSE, I prefer to the downside. Equities in the US, I expect a quiet session, and gold will be keep an eye on the 1300. Quick look over at the DAX. I mean, that's a quiet start, isn't it, compared to the remainder, well, the previous few days in this week. Each time the market's gap, we filled that relatively early. That hasn't happened as of yet, so something just to keep on your charts. They obviously got the pivot below the current low of the day, but it hasn't happened yet, and I would expect that at some point today that would take place. So data coming out in 7, so obviously be aware of that, and then 9:30 UK data. Any questions? Obviously, please do get them in, and if I don't speak to you, have a great weekend.